This is Terrence Andre Banks with Information Age Financial Solutions coming to you with an article I read from Sovereign Man about insurance plans. And all the other industries getting a lot of coverage in terms of small businesses and stuff like that, but not talking enough about the insurance. And he laid out a pretty interesting argument here about how the insurance industry may be the next ones need to be bailed out. We'll dive right in and put a link inside the description. Well, this is starting to become a trend. Over the past few weeks, state governments across the land of the free have been feverishly proposing new legislation that will virtually guarantee the entire insurance industry is wiped out. Interesting. The root of this issue has to do with something called business interruption insurance. Business interruption is a pretty common type of insurance designed to protect business owners against a number of risks. For example, let's say you own a restaurant and you have had a bad kitchen fire that forces you to shut down for a month. You most like have a fire insurance policy cover the direct damage of the fire. And a lot of companies would also have a business interruption policy to help them stay afloat during the 1 month period while the business is closed for repairs. But business interruption insurance has certain exclusions. It's just like any other policy, and insurers are very clear about what risks they do not cover. A typical homeowner's insurance policy, for example, covers your home against risks like the theft, fire, and vandalism. But most homeowners' policies specifically exclude flooding. So any homeowner who wants to protect their homes from a risk flood damage can purchase a separate flood insurance policy. Many insurance plans, including business interruption plans, also tend to exclude things like damage caused by war, government action, and acts of God. But again, any business that wants to insure against those risks is free to seek additional coverage. That's the whole idea of insurance. Customers are able to pick and choose which risks they want to insure and which risks they're willing to take. It's fair to say that most business interruption policies don't cover a worldwide pandemic that shuttered the entire global economy. But there's a growing trend now where state governments are proposing new legislation that will retroactively force insurance companies to protect their policyholders against COVID. This is totally nuts. The state governments are the ones that force business to shut down. Now they expect insurance companies to pay for the consequences, even though the policies specifically state that they don't cover that type of risk. They might as well demand for pay for every other insured and uninsured hazard. Did your house flood and you didn't have flood insurance? Well, it's retroactively forced the insurance companies to pay for that too. Pennsylvania, New York, Illinois, New Jersey, and several other states have proposed similar legislation or threatened regulatory action. This trend is also picking up steam overseas in the UK. For example, lawsuits are already pending against insurance companies for not paying out COVID-related claims. And given that just about every business will qualify for this retroactive coverage, there's simply no way that the insurance industry will be able to afford such an indemnity. Think about it. If the federal government made $300 billion worth of loans available to small businesses earlier this month, and that money was 100% used up in about 2 weeks, and they just agreed on another $300 billion this morning, so most insurance companies could be wiped out if the legislation passes, i.e. cue the government bailout of the insurance industry. Just like the airline, hotels, hospitals, the insurance company would be standing in line to suckle on the sweet taxpayer bailout teat, probably to the tune of another $500 billion. Of course, it goes without saying that the government doesn't have the money for any of this. We explored the government balance sheet many times in the past. Uncle Sam was already in the hole by minus $23 trillion, according to the Treasury Department's most recent financial statements. And over the last few years, even when the economy was incredibly strong, the federal government still managed to lose more than $1 trillion a year. Now that we have a real crisis to contend with, the deficit is going to swell to an unimaginable figure. I thought the number figure was already unimaginable to begin with. Frankly, it doesn't matter whether or not the insurance companies end up footing the bill. If the insurance companies are forced to pay up, the government will likely bail them out. Otherwise, the government will bail out businesses directly. Either way, it's pretty obviously the government is going to spend an unbelievable amount of money they don't have, which means the central bank, the Federal Reserve, will keep printing more money. That's how the system works. Whenever the government wants to bail someone out, the Federal Reserve first conjures the bailout money out of thin air and the loans into the Treasury Department. Crazy, right? The Federal Reserve has already printed trillions of dollars since the crisis started, and that may only be up the warm-up round. The longer this lasts, the more money they're going to print, and the more money they're debasing the currency. We're obviously living in extraordinary times, and it's perfectly reasonable to hope for the best. But it would be irresponsible to willfully ignore what the government and central banks are doing here. Conjuring infinite amounts of money out of thin air can have an incredibly destructive consequence on the currency. And that's why, as written as before, it's definitely time to consider owning some real assets. And he goes on to having a plan B. Again, makes an interesting point here. Definitely one to pay attention to, especially if you have insurance and where this is all going to. Eventually, or if they continue printing trillions of dollars, the currency does become debased, and it just purchases less and things just seem to control more. We might have hyperinflation, but that time is still way out, hopefully way out in the future, and just something you need to pay attention to, especially with insurance companies. You probably need the next bailout, so when you hear that, don't be so surprised. If this video has been any value to you, please subscribe, leave some comments. Until my next video, I'm out.